The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 9th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a terrific Tuesday. Let's make sure we do all that we can do to have a wonderful Wednesday. And welcome to all our new eSignal version 12 users, the trading platform that has now integrated TigerTV as one of its media options as an interactive data company continues to bring unparalleled features to its users base. So on behalf of all of us here at TFNN, I say welcome. Welcome to the Hotel California, as our man Tom O'Brien, our leader, coined it, because once you check into TFNN, you'll never check out, folks. And today and every trading day, you've got access to 9 hours of live programming with extraordinary technical market analysts, each providing their own opportunity as what the markets are doing and where they're headed, information that, to my knowledge, you can't get anywhere. That's right. You get individualized, different. You know, we all respect each other, most certainly, but we all give you our own opinion using different sets of tools out there. So, and this show here, it's an interactive show. So for 9 hours, you've got interactive shows where you can call, and it's an open forum. You can give us a call. You can speak to us about the market, a specific stock, a currency, a commodity, and we'll be happy to provide you with our opinion and information that you might want to consider. Our call number, by the way, it's 877-927-6648. Again, my name's Steve Rhodes, the morning anchor here that gets things kicked off each and every trading day. I'm here for the next 2 hours, and I'll do everything I can to teach you how to master the tools for trading. That includes tactical tools such as the A to B equals CD pattern, sometimes referred to as the lightning bolt pattern, Fibonacci expansions and retracements. The combination of those two help us to identify Gartley and butterfly patterns. Of course, we always pay attention to Japanese candlesticks because these are the signs that the bulls and the bears make for you and I each and every trading session. I'll also share with you trading strategies because unlike most traders who focus only on tactics, you and I know that to really master these markets out here, in order to really achieve our goals and our dreams, we've always got to think like a strategist, what I call mastering probability. It's also the name of my daily newsletter service. It's available here at TFNN.com. In fact, if you go to TFNN.com, you can click on my name, Steve Rhodes. It'll take you right to the landing page. You'll get to test drive my newsletter service for 30 days, no risk to you. So let's you and I, today and every day, let's do all we can do to think like a strategist, because strategists will slay that tactician all day long. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, futures, Dow futures up about 13 points. They're trading out at 16,873. S&P futures up 2. They're trading at 1962. NASDAQ futures up 5, trading at 3688. Russell 2000 up a point and a half, trading at 1172 and change. King dollar on the move this morning, up 4 cents, up about 5 cents, trading at $80.27. Hard currencies are moving this morning. We've got Goldilocks up $9.20, trading out at $13.25.70. Silver up 16 pennies, trading out at $21.17. Light sweet crude pulling back. It's off 61 cents. It's trading at $102.79. Again, our call number 877-927-6648. Happy to field your question. If we take a quick peek around the globe out here, we'll see over in Germany right now. What a soccer game they played yesterday, the German team. Not much of a celebration in the market out here for the DAX. It's up 12 points, basically unchanged out there. The FTSE is off 27 points. She's trading out at 67.11. Over in Asia last night, interestingly enough, the Nikkei basically unchanged. It was down 11 points on a $15,000 index. That is what we call unchanged. The Hang Seng, whole different story out there, off 1.5%, down 365 points, and the Shanghai down 1 2/10%, off $26. We'll take a look at the international markets, but first let's go peek in on what's going on inside our futures markets. We're going to start off taking a look at the daily charts out here, get kind of a feel as to where we're at, as to what it is, what the futures are doing. Let's start by taking a look at the S&P futures out here. Now, If you followed us for a while here on Tiger TV, what you know is that there's an area that was the old area of resistance. There's a new market profile. So if you're watching us on Tiger TV, this is the e-signal platform, e-signal chart out here. One of the tools that I have turned on this chart is the TAS market profiles, one of our partners as well out here. In fact, at TFNN.com, if you go to that homepage, 8 o'clock each morning, right around 8 o'clock, there is a video out there that our man John Logan puts together, and that is available to you for free out there. We're utilizing their market profiles. I'm utilizing their market profiles to help us identify some logical areas of support and resistance. Just to give you an idea here, it's the daily chart that we're taking a look at. You can see coming off of the bottom. When I say the bottom, I'm really referring to the most recent swing point low where we saw a significant change in trend in the marketplace. That was on April the 14th. As price came off of the bottom, once it really got above the what's got green horizontal line on my screen, what's referred to as an unfair low or a support area, things became more bullish to neutral. Once they broke above resistance, then it became much more bullish out here. That break above resistance, above that market profile high, that took place on May 27th out there. Now, old resistance, you can use this for wherever you identify resistance, whatever trend lines, channel lines, profile lines, whatever the swing points, whatever it is you might use. Old resistance, reversal signals, old resistance basically should become new support. Now, there's a new market profile that is in place here today. But what you want to always do is you want to go back, you want to take a look at the longer-term areas of support and resistance. That happens to be priced out at about 1954. What did the ES Mini do yesterday on its daily chart? Came down and it tested that level. So as we speak right now, if we utilize market profiles as one of our tools out here, all that we've really seen is the market come back and test a breakout area, right? A breakout area, once you get above resistance, whatever you're using for that resistance level, you actually like to see price come back and test it and determine whether or not it was really a false break to the upside. So today, a very key trading session is going to be, I don't know, it's today, any trading session at this stage until this new market profile that was just here established today, until it gets a few more days behind it. I say you got to use that 1954. Now, 1954, if that fails, price is the likely target, the first target, quite frankly, for price is going to be down at its most recent swing point. That most recent swing point would take you back to June 16th. And that's somewhere in the range of 1919 to 1933 out there. So those are the levels inside the S&P futures that you want to watch. In my opinion, no bearish signal here yet. And that is on the daily chart. What we're trying to do is just stay into different time frames. We'll take a look at intraday time frames, different story. Take a look at weekly time frames. In fact, if I put the weekly time frame out here, why don't I just do that for the ES Mini, just so you can get a feel for where we're at on the longer term time frame. My belief, because I know this to be true, so I share that with you, is that, and we're taking a look at a weekly chart out here, in order for the market to really give us a clear indication that it's going to change the trend, you're going to see some kind of bearish reversal signal. It just has to happen. You've got to get some type of bearish candle. Now, the week, we're only into the beginning of Wednesday, so we got a lot of time left in the week. However, if you get a close below last week's open, that happens to be a price level here of 1951.75, you get a bearish reversal signal. But right now you're trading at 1962 on a weekly basis. If you take a look at where its old resistance was, that was at 1846. So we're a ways away from that. That is on the S&P futures out here. Now let's go take a look at the other three out here. I'll do that a little more quickly for us. Let's take a look at the NQ, the NASDAQ futures. If we take a look at the NASDAQ futures, we look what they were doing. Number one, if you take a look at the very bottom of my screen out here, you're going to see the 14-period relative strength indicator. That shows us when the RSI gets above 14, tells you got a nice strong move, a nice strong trend out here. Also tells you that you're overbought. What typically happens is at some point in time, you start to see that condition get worked off. You want to see that condition, quite frankly, get worked off. And the way you want to see it get worked off is you want to see price start to move sideways. Well, in this case here, quite frankly, until the NASDAQ futures get down to about the 37.97 level, all they're really doing is working out that overbought condition. Yes, there is a new market profile that's in place today. If you want to know where that support level is, it's at 36.6850 out here. But I want to take a look at old resistance, and that's the market profile that was in place yesterday. And again, that's somewhere right around the 37.98-ish type range. If we go take a look at the Dow futures, take a look at the Dow futures, the daily chart on it. It did not create a new market profile. It is trading below that resistance level. Closed just slightly below it yesterday. That, by the way, is at 16,889. I believe that is the number support. And this is going to be a key area for us to be watching inside the Dow futures because we're looking for changes in trend here. And if we do see a break of that 16,769 level, that's the unfair low out here, then price will come back. It'll probably get down to the June 16th low, right around 16,624 out here. If it holds that unfair low, that support, things still, quite frankly, remain bullish out there. And Leslie, let's go take a look at the Russell 2000 futures out here. Russell 2000 futures, what did they do yesterday? They held support at that unfair low, at that older market profile in that 1168 type area. 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart, anything that you'd like. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the futures market. So let's go get some clues here as to what the market may be doing this morning. The next chart we're going to put up on the screen here, talked about this yesterday in great length. We're taking a look at the 120-minute time frame chart here for the Euro-Japanese yen. Now, the reason that we're taking a look at the Euro-Japanese yen is because this single currency pair, this cross pair, tracks the U.S. stock market better than any other currency pair that is out there. And so we want to be paying attention to what's going on from a directional standpoint. Now, as we were pointing out yesterday, coming into the 11 o'clock show, I do the shows from 9 to 11 o'clock in the morning, that it looked like there was, what I had drawn in here, I had drawn this pattern in a couple of days ago, drawn it in on Monday. If I go back to Monday, that was, July 7th. So I drew this pattern in on Monday. We were taking a look at this hammer candle that had formed at 7 o'clock in the morning. Of course, I told subscribers if we see a break of that hammer candle, what we're going to likely see is we're going to likely see a 0.786 Gartley buy pattern form. Now, what I like to do is use Fibonacci numbers, both expansions and contractions, to use that as the general area where you expect price to stop. In this case here, I was looking at an expansion of swing points, and that was my B to a C swing point. That was the low at 5 a.m. during the 5 a.m. session on July the 4th, all the way up to the retracement that came in at about 7 o'clock in the evening or during that session on July the 6th. If you take the measurements of that, you multiply it times 2.618, you subtract it from the high of the session at 5 p.m., 7 p.m. 7 p.m. on July the 6th, that would take you down to a price level about 138.17. Now, we actually saw price spike down to an area of 138.10. What it formed yesterday, it formed a hammer candle. Hammer candle is a one-candle reversal. And when that comes at any kind of a pattern completion, that's a very strong message. So it sent a very strong message here that, okay, the bulls were truly defending this area. Why is that important? Well, because of the directional correlation that it has to the markets. Now, the very next trading session, if you watch this on Tiger TV out here, you'll see we didn't get any follow through to the upside. Is that a bad thing? You like to see follow through, but no, I teach a trading strategy. I've taught my newsletter subscribers a specific trading strategy for trading the hammer candle out here, and this one actually qualified. We also got a nice bullish engulfing candle last night at 9 p.m. That was taking place right here during this candle session. That one did have some follow through. What we have seen is the hammer candle that we were paying attention to yesterday. That's the one that came in at 7 a.m. That low, which is 138.47, that is acted as resistance. Used to be support. A hammer low is support. Now we're seeing that act as resistance. We saw a little spike up during the 3 a.m., the 2-hour 3 a.m. session out here. But it does look to me like price. In fact, if price takes out, it gets back above that hammer candle, what we're likely to see is an A to B equals CD to the upside. What is that going to do for us? If we take a look at that pattern out here, that potential pattern right now, what that says to me is we would likely see price move up into 138.76 to 138.82. What should that do? That ought to get a little bit of a rally. Is it a counter-trend rally? I don't know. We'll have to be paying attention to volumes out there. Does it have to take place today? No. Can this thing break this hammer candle to the low? Absolutely. The market is going to do whatever it wants to. Because if we take a look at that 120-minute time frame chart, when that hammer candle also formed, we see that price using that 14-period relative strength indicator also was in the extreme oversold condition. So a bounce or move sideways was to be expected out here. Nonetheless, if in fact that hammer candle that formed yesterday at 11 o'clock in the morning, that low 138.10, that gets taken out, yeah, guess what? This market will continue its move lower, and I think continue its move lower in a big way. So this is an important important currency pair for us to be paying attention to. I mentioned gold was up this morning. Yesterday, I had, as I was going through gold, we took a look at market profiles. We'll do all that as well during the next couple of hours. But one of the things that I mentioned, I got a couple of emails on that. I said, what is it that could stop the advance of gold out here? I didn't update. I did not have the chart updated. I do have it updated right now. So let's go take a look at what I was referring to, and that was taking a look and analyzing, whichever it is that you like, the commitment of traders data that CFTC puts out each Friday. Because of the holiday this week, that data wasn't available until Monday. I did peek at it on Tuesday just to see where we were at, and what I was focused on is really the second panel from the bottom. What I was focused on was what were the commercial traders doing. The commercial traders are the big money, and not just what were they doing, but what were they doing as a percentage of open interest. As I mentioned to you yesterday, and that's the big money, that's the smart money. They've been moving to a larger net short position on this bounce that we've seen in the market in gold. It's got to make you say, something to think about. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 51 points, trade on 16,957. S&P up 6, trade at 1970. NASDAQ up 17 points, trade at 4408. Russell 2000 up 4 at 1176. NDX 100 up 15. New York Stock Exchange up 24, trade out at 10,986. The movers in the market this morning leading the charge. The upside, GW Pharmaceuticals up $3.76, up 4%. Zillow up about $3 right now. AeroVironment up $3. Amazon up $2.35. Tesla up $1.63. American Airlines up $1.80. Reynolds American up $1.45 out here. Capital One Financial, COF, up $1.30. To the downside here, Salix Pharmaceuticals off 5% this morning. SLXP is the ticker symbol. Gigamon, GIMO, down 33% here this morning. What's the deal on this? Looks like they're out with numbers. Revenues of $34 million is the range. Looks like their prior guidance was $38 million. They are just simply getting hammered this morning with volume. We'll take a look at that stock chart here in a few moments. The Container Store, TCS, down 11% this morning. That's off $3. Looks like there's some volume behind that move as well. Las Vegas Sands down 73 cents out here. That's down less than 1%. So not a ton of movement to the downside, at least not just yet. Now let's go back here. Let's take a look at this gold chart we were looking at. It's a weekly chart, by the way, that you can see on my screen out here. And the unusual thing about the move up, if we take a look, there's a number of different patterns here for us to pay attention to on the gold chart. Number one, if we take a look at what I'll call the shortest term type trend, that's a trend line that comes off of the October 5th high. That's our first touch point. And that is at 1798.10. We use as our next touch point the high from March 21st out here. That's at 1392. We did see price break through that trend line. Now, it didn't break through that trend line with wide price spread, accelerated volume, or any kind of conviction. It's done it by moving sideways, and that's never blown my skirt up by moving sideways to break a trend out here. So I'm going to say, did it break a trend? Technically, yes. But fundamentally, I'm not going to go with it having broken a trend there. It moved up into the trend with nice wide price spread the week of June 20th. But this is not the way you want to see an area of resistance get broken. Okay, so now what else do we know? Well, if you take a look at these little not humpback whales, but these little humps on my system out here on the upper portion of the chart, that's about a 13.5 month cycle that the gold contract seems to work really well at identifying significant market swing point highs and lows out here. And what that says is we've got one that is due right around next week, the week after. Could it have been several weeks ago back in June? The answer is yes, it certainly could have. But at this stage here, the interesting thing, when I take a look at what the commercial traders are doing, again, that's the big money out there. They've been, and look, when the lows were made, just put this in perspective, if you're watching us on TigerTV, when the most recent lows were made back in June of 2013, as well as in January of 2013, what were they doing as a percentage of open interest? What they were doing was they were down in the less net short type area. And they really weren't at that range back here on June 6th. That's why I say it's somewhat suspect. Doesn't mean that we're not going to see a breakout here. This is something to think about. It would not surprise me to see one more push down, for that to line up with the 13.5-month cycle that is out there. At least that's the message of the large money. So very unusual. If we take a look at silver out here, hi-ho silver, it also offers the same message. Now, in the case of silver, it did break its trend with conviction. Here's its trend line. That takes us back to the May 6th or April 29, 2011 high. That's out at $49.82, a number of touch points to the downside. So that makes this trend even stronger than when we took a look at Goldilocks, the November 30th, 2012 area. That's a touch point, 34.42. And that trend was broken with conviction. So the week ended June 20th. You did have wide price spread. You did have accelerated volume. But here's the deal when we take a look at silver. The commercials are also getting to large net short positions. In fact, larger, I mentioned this yesterday, larger than at the highs back here on February 28th, larger net short position as a percentage of open interest than was formed back here at the September 2013 level out here. So it's unusual to see this take place. It's unusual to see them move to such a, and you take a look at this line, so this is all updated through last Tuesday. Okay, so just to put this in perspective, the CFTC is releasing data as of last Tuesday out here. The data goes back to 2006, so that's how I track the data. So we're taking a look at historical data and just trying to keep things in perspective. And so, yeah, we've seen some nice moves in the metals out here. But, boy, if ever there was a cautionary sign, that's one of them. That is a cautionary sign. Now, if we go take a look at the signal box out here, if we go take a look at the market profiles, let's do that. And let's take a look at Goldilocks. Let's take a look at the daily chart out here. What we're also going to see on the daily chart is that gold has not been able to pierce its resistance level. If it's tested it, in fact, actually, I take that back. It did pierce it. It pierced it on July 2nd, then immediately gave it up that very next trading session. Didn't take long for it to give it up. So that says a very important level here. I'm going to say, well, you know, the market profile is 1326.60. That's its unfair high. But really the level that we really want to be paying attention to is going to be 1334.90. Look, if that swing point gets taken out with volume, I don't care what remember the commercials here, the large commercials, they are large ocean liners of money out there. Big basket of money. So they do not turn on a dime out here. And what the large money guys can do is they can afford, because they're building positions, they're building positions out here. So they can afford a price advance in gold more so than most individual traders like you or I could or should. In fact, you always want to make sure, I'm not suggesting that you short gold here. That is not my message. So I want to make sure that I get that out here. But my message is, I will not be surprised, because the message of the markets thus far is that we should see one more push down inside of gold or silver. Ideally, it'll be a push down with some light volume out here. But in the case of gold, if it clears 1334.90, then we'll be taking a look at maybe an A to B equals CD pattern. In fact, that case there, it would be a large one. So that's what's going on inside of the metals complex out here. Let's take a look and see what's going on in the liquid metal, light sweet crude. Right now you got crude oil down about 59 cents. When I take a look at the market profile, we're going to see a little bit of a delay out here. But what we are taking, we're going to look at a couple different charts when we take a look at light sweet crude. Number one, yesterday, we saw it close below its unfair low. That was at a price point of 103.48. You're at about 102.81-ish as we speak right now. So now we're beginning to see a change in trend in light sweet crude. Let me put up my, that's showing, we're taking a look at the market profiles using the E-Signal chart. Let's go take a look at the Ensign chart out here. Again, all of the data that we're looking at, it's all being fed by the E-Signal platform. Always has for years and years and years and years. For my charting application out there, just simply because of the accuracy and consistency of the data out here. Now we're going to go take a look at the Ensign chart. Just simply have got a nice little rising price channel. So the question is, we've seen a break of a trend, of a support level, I should say, inside of the market profile. And the real key to seeing a change in trend in light sweet crude is taking a look at the current August contract. And if we come off of the lows out here, that's the trading session back on January 13th. And what I'm using is I'm using the open. I'm using the body of the candle. So when we draw channel lines here at TFNN, taught to us by our man Bud Rolfs, what we use is we don't use the extreme emotions of the candlestick, meaning the wicks. We actually use the body of the candle. And what I like about that, what I love about that, is my belief is that when we take a look at a candle, the real essence of price is the body of the candle, not the extreme emotions out here. So it is such in line with what Bud Rolfs also developed. That's a beautiful thing out here. And so I'm using the open, and what you're looking for is the largest number of co-located opens and closes. What does that mean? It means it doesn't matter whether we're using an open or a close out here. In this case, I'm using the close of January 13th, and that close, by the way, is, $90.04 out here. Then we're using the open of the session on May 2nd. That open, by the way, was at $97.70. How about the close of the next session, May the 5th, because price had moved up, then it moved back down, and it tested the bottom to really situate the rising price channel. So what is light sweet crude doing right now? Light sweet crude is headed for the swing point, its most recent swing point. That is at June 5th. The high there is 101.99. So $102. The low of that swing point is 100.93. If we see light sweet crude break through this channel line, come into the swing point with volume, then it says we're seeing a change in trend in light sweet crude. What you'd like to see, if in fact it breaks this channel line, you'd like to see it break it, come back and test it and say, no, I no longer want to be a part of that rising price channel, and it's time for lower price. And if you say, where is it that lower price would take us to, we would just take a look at normal retracements. Say, now, the first retracement, the dead cat bounce, the 0.382 retracement level, that's at $100.72. I would say if it breaks the channel line, better chance that it moves down to the 0.618 retracement level right around $96.52. That is what's going on inside light sweet crude. In fact, as long as we're over here, let's go take a look at currency pairs. We didn't spend any time yesterday taking a look at currency pairs, so let's go do that other than taking a look at the euro Japanese yen. But hey, that's not the only game in town. Let's go take a look at the euro US dollar. This is the weekly chart on our screen out here. The weekly chart just shows that price is trading with inside both a downtrend channel. It's kind of like in a connected area, downtrend channel line. That's the red line on my screen, diagonal line from lower upper left to lower right, and the trend line, which is the upper left to lower right. If I pull this back, you'll see this is a trend that takes us back into the in a channel that takes us back into July of 2008 out here. But let's go take a look at a daily chart. Well, actually, when it comes to the euro, let's go take a look at a intraday chart. See if we can see any patterns out here. The euro Japanese yen. Let's go take a look at the 30-minute time frame out here. In fact, let's do this. Let me go ahead and get rid of the counts on this. If we take a look at the euro U.S. dollar, we're going to see an A to B equals CD down pattern. That's what we refer to as the lightning bolt. That A point on here is going to be the price high at 4 in the morning. That's on July the 3rd. That's right at about the 139.26 level. The B point I'm going to use is the first move down, and that's to the, and you can see here it made a 100% move of a move. What do I mean by that? You're always looking at swing points. If you take a look at the left-hand side of the chart, price stopped right at that swing point level. That was from about 6 o'clock in the morning on July the 2nd. So as price moved down into the time period here at 4:30 in the morning on July 4th, made a 100% move of a move, and then just made a shallow retracement. That shallow retracement gave us a 1-to-1 price projection. Let me do this. I'm going to get rid of the 1-to-1.272. Let me just put the 1-to-1 on here so there's no confusion. Here's your 1-to-1 price projection of the euro U.S. dollar. And take a look at where price actually stopped. How does that work, folks? You got to love that. So there's your 1-to-1 A to B equals CD down on the 30-minute chart. Now, any retracement of the euro U.S. dollar, what we would take a look at is I'd take a look at the entire leg, the entire A to D leg out here, and that says what we're likely to see is at least a dead cat bounce. I would say 138.54. However, with the euro, I got the euro Japanese yen. My apologies. I got the euro Japanese yen out here. Well, there's your 1-to-1 A to B equals CD on that pattern out here. But I apologize for doing that. I should have opened my eyes and paid attention. Let's go take a look at the euro U.S. dollar out here. Not that we can't go take a look at that currency pair, but there's that also happened to tie out with that hammer candle we looked at earlier on the chart. Now let's go take a look at this currency pair. Let me just refresh my chart, make sure that we've got everything here. We're going to take a look at its A to B equals CD down pattern as well. just clear almost everything off of the chart. As we take a look at its A to B equals CD down, you start with your 8-point out here. Trading session of 10:30 in the morning. Again, it's a 30-minute chart that we're looking at now. That's your 8-point. Your B point came down right here on the trading session of August of 8:30 in the morning. That was on July 2nd. Just a kind of a shallow retracement. And what we will see is a 1 to 1.272 A to B equals CD to the downside. Now we're taking a look at what's going on to the upside here. I can see the A to B equals CD pattern. It looks like it has formed and completed. That was coming off of the low here. That's at 2:30 in the morning on July 7th. That becomes your A point. Your B point looks like it's right up here, the trading session of 8:30 in the evening on July 7th. Makes a retracement here. You can see 1 to 1.272 A to B equals CD. That gave us a price projection of 136.30. We actually saw the euro get up to a level here at 2:30 in the morning this morning, up to 136.29. Gosh, you got to love utilizing these Fibonacci expansions and retracements out here. Now what we have seen thus far in this currency pair, because we'll go take a look at the entire pattern, the entire A to B equals CD. We'll see it's done just slightly more than a 0.382 retracement inside the currency pair. Here's the real key to what we should be looking for. And what we should be looking for, in fact, when a market breaks a swing point out here, you want to see it done with this type of candle. This is the candle that came in at 10 o'clock in the morning yesterday. The prices kind of moved back into that breakout area, and that is on the euro-US dollar. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Kind of a flattish market at the moment. The Dow's up 14 points. The S&P is up 3. NASDAQ Composite up 9. Russell's up 1 point. NDX is up 10. New York Stock Exchange up 5. So very flattish market out here. Let's go back just for a moment. Let's take a look at Euro-US dollar currency pair. Again, the 30-minute chart. We spent a little time this morning taking a look at gold, taking a look at silver on their weekly chart patterns out there. We took a look at trend lines. You know, even if you're just brand new to technical analysis, hey, if you're brand new to technical analysis, this is the place you want to be, and that's here at TFNN.com. And if you're an experienced user, well, guess what? This is also the place that you want to be. Live, interactive, technical tools that we share with you for 9 hours each day. We begin the trading session at 9 o'clock in the morning and end at 6 p.m. Again, my name's Steve Rhodes. I kick things off for TFNN. I've got a newsletter service called Mastering Probability. You can go test drive that. Go to the homepage of TFNN.com. Upper right-hand side, you will see just click on my name. Forget the upper right-hand side. Click on my name. It's down towards the bottom. It'll take you to a landing page, and you can go ahead and order the newsletter and test it out for 30 days. Now, it's the trend line here that we're focused on and paying attention to. That trend line is coming off of the highs out here at 10:30 in the morning. Again, a 30-minute chart from July the 1st. That's the touch point that I'm using. And then also using this little candle session from 4 in the morning. That's on July the 3rd out there. And what's interesting about that trend line, take a look at how price was hugging that trend line here through most of the 7th of July. Was trying to break out, couldn't break it out. But what it did break the trend, it did it with what? Did it with wide price spread. We don't have volumes when we take a look at currency pairs. That's the whole reason to really be paying attention to candlesticks, because candlesticks, they work uniformly on any chart, on any time frame out here, and they tell you a whole lot about what the buyers and sellers are doing. So the euro, at the moment, on its 30-minute chart, it has broken that trend. It did complete a to B equals CD to the downside or to the upside out here, but no real reversal candle, so to speak, just yet. Just simply a retracement of its last move. If we go from the low to the high, you're going to see almost a perfect 0.618 retracement level out there. So it's made a retracement. It does look like the Euro-US dollar wants to go ahead and make its next A to B equals CD to the upside pattern out here. That would take the Euro-US dollar on a 30-minute chart. It's broken the trend, right? It's broken the downtrend. That means we ought to expect and look for moves to the upside out here. That says Euro-US dollar ought to move to 136.43, maybe 136.55 out there in the marketplace. So what are we going to be paying attention to? I've got about 1 minute to maybe close this out for you. Well, take a look at what took place yesterday. What took place yesterday, the VIX index here, right now trading at 1178. It tried. It made a valiant attempt at breaking that 50-day exponential moving average, $12.06, 12.04 as we speak right now, but that was repelled. And if the VIX index is not able to get above the 50-day exponential moving average, you're going to see one of two things take place. You'll see a movement that either moves higher or moves sideways. Likewise, you get a close today above the 50-day exponential moving average, and that will be suggesting that we are seeing a change in trend take place inside of the market. So that would be the thing that I would most focus on during the day today. We'll keep an eye for you on the Euro Japanese yen as well. Don't forget, folks, 9 hours live each day for all of you eSignal 12. All you folks that have upgraded eSignal 12, we welcome you to TFNN.com and have yourself a wonderful Wednesday. Stay tuned. I'll be up next in about 8 minutes or so. And otherwise, I'll see you bright and early tomorrow morning. Take care, folks. Have a great Wednesday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.